Welcome back to the second half of the Future Show here on the TD Ameritrade Network. I'm your host, Ben Lichtenstein. So far this morning, we've been discussing how the indices, the energies, and the grains, for that matter, have been in a bit of a holding pattern the last week or so, and some potential catalysts that are looming that have, well, potential to provide the imbalance necessary to break them out of those ranges. And speaking of catalysts, with the potential to spark a breakout type move, the UK will officially have a new prime minister today, as Boris Johnson will step up, and replace Theresa May. For what this means to us as currency traders, we've asked Bob Iaccino, the founder and chief strategist of Path Trading Partners, to join us here this morning. Bob, it's good to have you back. I want to get your thoughts on Mr. Boris Johnson and whether or not he'll be able to avoid a second referendum and a general election as he's vowed to.
I don't know. That was a great segue, by the way, Ben, but I don't know that he'll be able to avoid that. The issue that we saw when Boris Johnson was clearly the winner and officially announced, we got the pound up this morning, but it's the first time really in 4 sessions, and if you look at the chart, it's clearly not in an uptrend. And these slight corrections to the bear market we've had in the pound have only happened during times of certainty for Brexit. In other words, we were moving toward a deal, we were moving toward a hard Brexit. It almost doesn't matter what the certainty is. You get this short covering when there is some sort of certainty, because then traders and investors kind of can take a step back and say, okay, let's see how this plays out and let's reassess. Boris Johnson, in his speech yesterday, talked about getting Brexit done, avoiding the second referendum, as you said, acting on the will of the people, which, in a weird way, I agree with him on that. There was a referendum and it should be played out. I don't think politicians should be able to stall and then potentially change the vote by changing public opinion over time. Having said that, I think Boris Johnson is looked at as sort of almost like a bull in a china shop in terms of getting this deal done. And with Parliament having passed the referendum that says it's going to be really difficult to exit the EU without a deal, this is more uncertainty. So I see the move we're seeing this morning as short covering, I should say, more than anything, as opposed to a move up because there's some kind of certainty.
Noted. Bob, you mentioned Boris Johnson, more like a bull in a china shop, but he's actually tried to be all things to all people. He said he wants to mirror the UK population, but he's also taken a very aggressive approach towards business leaders and their Brexit opinions. He basically told them to take a hike. Is it time for him to get serious now? I mean, he still has to deal with Parliament, who opposes a no-deal Brexit departure, and he's got an EU that doesn't seem willing to budge.
Well, he started his acceptance speech changing the acronym DUD to DUDE. So I don't know that he's getting more serious. I don't know. I mean, if you saw that speech, he seemed very serious about Brexit, not so much about changing any sort of approach to the way that he campaigned for the exit in the first place. So I don't know if it's time for him to get serious. Again, I don't get political. I don't say whether I agree with the UK exiting the EU or not, but it was voted upon, and the one thing I don't personally want to see, so from that perspective, I don't think he should necessarily agree with business leaders. There was a vote, the vote was taken, it should be acted upon.
Noted. Hey, let's move on. Let's talk about Italy and the impact that they're having right now on the global market. There's a fair amount of uncertainty going on there. What's the latest, Bob?
So it's interesting. Italy has more of an effect under the sort of shadow of Brexit than it does if Brexit hadn't happened.
Okay.
Because to me, it's too small. It's a larger economy in the EU, but that's not really saying much. To me, the EU is Germany, and it's Germany, and it's Germany, and that's it. Which is why the German PMI, the manufacturing PMI, second month below 50 is a little troubling. But having said that, Italy to me is more critical in the shadow of the UK exiting, because there have been mild talks in the past about, what are we calling that, an Ital exit? I don't know what it was. That there could be some sort of a vote to get them out of the EU, and especially if Boris Johnson is somehow able to make this happen.
Yeah.
So I think that's the uncertainty when it comes to Italy, not so much a direct economic impact.
Bob, you mentioned the disappointing PMI numbers we saw last night. Does this increase the odds for the ECB to cut tomorrow?
It makes it a lot easier than the Fed, a lot easier of a path than the Fed has, right? As soon as the U.S. Fed talked about being open to a rate cut, and I'm paraphrasing, they got almost 3 consecutive pricing numbers that were higher. Now, there's a lag, so you can argue that it doesn't change that, but certainly this makes the path easier for the ECB. I don't know that they move into cut mode. I believe this was going to be the meeting where they set up the cuts or set up the discussion of easier monetary policy, whatever policy tool they're going to use. This certainly makes that easier. It certainly makes it more of a done deal. I'd be shocked at a surprise cut in this particular meeting, but I think the rhetoric being much more dovish than expected is now expected.
Noted, Bob. The IMF lowered their 2019 outlook for the world economy growth to 3.2% from 3.3%. Not a major change, but the IMF boosted their U.S. forecast to 2.6 from 2.3. I'd imagine that's in addition to some of the other impact or some of the other weaknesses we've been talking about in the Eurozone and the British pound in the UK. That's what's helping lift the dollar some this week back to the mid-97 handle again.
Yeah, a little surprising. The IMF tends to watch movies in the theater of the obvious, right? They reduce their global GDP when everybody's reduced it. Every single analyst on the street has already reduced it. But raising the U.S. one, a little bit surprising to me, and I have to think that they're doing that in the context of the Fed cutting rates, so kind of getting ahead of the curve there. So I think that might be the point there.
Speaking of the Fed cutting rates, just a real quick thought on next week. What do you expect, Bob?
You know, I expect 25, but I think that the chance of 30 is probably a little bit higher. I'm sorry, 30. The chance of 50 is probably a little bit higher than the market has a price now. They got about 46% on the CME Fed watch tool last week for the probability of a 50 basis point rate cut. There is a lot of research, as many Fed governors, Bullard being one, Williams being another. So there is a lot of research for saying if the Fed's going to do something, they need to be aggressive. I think they're going to do 25, but I think this is a rate cut cycle. I don't think it's a one and done. I don't think they're taking back the theoretical mistake of the rate hike of last year.
Bob, you're bringing it and you're making it rain here, talking currencies this morning on the Futures Show here on the TD Ameritrade Network. Traders Bob Iaccino, founder and chief strategist of Path Trading Partners. Bob, appreciate you joining us here this morning.